The wait is over. The BTC ETF has been approved. But what's coming next? What can we expect over the next days, weeks, and months? That's going to be one of the main things we talk about today, because as always, we want to make sure that you're able to stay on top of this on-chain world in constant transformation. GM, welcome to Web3 Academy. We are your one trusted source to capitalize on the next big phase of the internet. I'm Jay Bird, along with my co-host Kyle Reedhead, and we believe that crypto is going to change the world.
There's not much news to talk about today, Jay, so we'll make this one a short episode and just wrap this up. I'm just kidding. This is a jam-packed episode. As Jay just mentioned, the BTC ETF is approved. We'll talk about everything that has gone on this week there and what we expect moving forward, both in the news, but also in a market watch segment. Also, we woke up this morning and Circle, the company that created USDC, has filed for an IPO in the US. It is going public alongside Coinbase. That is huge. And then that's not it. Visa has a Web3 loyalty program. Fox is launching a new platform called Verify on Polygon to do exactly what Jay and I have said is going to happen in the future with AI content and blockchain. OpenSea is launching embeddable wallets. We've got a bunch of really good agree, disagree, explains to talk about today. We've got one of probably going to be the most exciting episodes we've ever had. It's a bullish time to be in crypto. I'm super excited. I have not taken a breath for the last 24 hours, so I'm excited to do this, Jay, but let's take a breath, take a second, and just go over some gratitude. What are you grateful for today? Is it
I don't want to
I'm
take a
grateful
breath,
for?
man. I'm just hyped. I'm just so
I woke
hyped.
up this morning and went for a run, and I don't run.
you just had to get the energy out. I'm grateful for this moment in history. This is a moment we will look back on. We've built up so much to this moment. Kai, you and I have joked that we wanted the ETF to get approved just so we could stop talking about it, because it really has dominated the airwaves for so long. But now that we're here, I actually find myself taking a deep breath to appreciate what this means and is going to mean a decade from now or a century from now. And we are at the beginning of a monetary evolution. We are at the beginning of an internet revolution. And there is no bigger moment than the legitimacy of American regulators saying that they are willing to allow their public to get involved in this monetary revolution by owning Bitcoin and through the ETF. And so I think it's easy to get caught up in the number go up. What does this mean for my investment? Like, very exciting. But there is something much bigger at play here that connects back to the ethos of why we all got into Web3 to begin with, which is to create a better world, to remove control from our government that has been devaluing our currency for basically ever since fiat money came into existence. And this is a big, big moment for all of humanity, I believe. I believe this is a moment that we are now taking steps towards a better system that will allow us all to thrive and not be so reliant on money that is constantly inflating, constantly going through money printing, all these issues that are caused by the way that our governments manage our money currently. So I'm just, grateful to the SEC, I guess, for approving, and grateful to everybody that's listening to the show. Like, we all were a part of this. Everybody here made this happen. I know, obviously you weren't at the SEC passing these laws, but this is a big moment for all of us. So grateful to all of you. Just stoked. I'm so excited.
I second that completely. I'm grateful that the ETF was passed, one, so we can stop talking about it, although probably we still won't stop talking about it for a while. But two, I think it just means something really big for the world. And so I think obviously excited there. And I think, Jay, as I reflect on this, I'm very grateful that we started Web3 Academy when we did, and for all the listeners that you've been listening for as long as you have, because we started it in the bear market. And we're like, we're probably going to go through some tough times here, but we believe in the space and we believe what's happening. And we're like, let's just build to the bear, and like, we'll see what happens coming out the other side. And we made it. We made it out the other side. And now we've sort of like, it's been legitimized, I feel like, right? I think people in the mainstream media are now about to hear about this. There are so many commercials out for Bitcoin ETF right now. And I think I feel very grateful that I've taken the last however many years to just commit to this space and really understand it so that when people ask, I have a good answer, right? I can talk about this and explain it, and I really understand it. And so I'm grateful that both you and I and everyone else in the Web3 Academy team and the community has put in so much time and effort into this space over the last couple of years to be educated and involved and heavily invested in this space well before this happened, which is obviously going to allow Bitcoin and crypto become more mainstream, which we will talk about more, especially in the Market Watch section. So yeah, very grateful to have put in the hard work during the tough times. And I think now we all get to celebrate. I had a couple beers last night. I happened to be just like walking by. It's funny. My girlfriend and I were just like exploring and walking through Buenos Aires after a cafe that we were at. And we stumbled upon, we hadn't seen this, but like where there's this court of just bars. There's like probably 30 bars. It just all patios. We're like, whoa, we've been looking for a spot like this where we can go have a nice beer, because mainly it's cafes. And we happened to be walked through that as the Bitcoin ETF got approved. And I was like, well, we're going to choose one of these and have a beer right now. And it was happy hour. I was like, this is perfect. So yeah, it was a great time.
Days like yesterday, I'm so sad that I don't live in a major city. Did you see anybody else celebrating? Like, this gave me vibes of like Argentina winning the World Cup. Like, I was like, I want to be in a city where there's like Bitcoin flags and people are running around all excited. Like, did you see that?
No, it's a digital community here, right? So people were celebrating in Discord with me and on Twitter because I took a picture of me drinking, and I had all these people share them taking a drink, but they were all from different parts of the world. And that's the cool thing about Bitcoin is it's this digital nation. And so I didn't see anyone in the physical world who had any clue what was going on. Although I think I saw a guy in an Ethereum t-shirt at the gym yesterday morning, but I don't know. Anyway,
we'll talk about why he should also be excited in this episode.
Yeah.
But you know what else is really cool, Kai? Right now, to celebrate this Bitcoin ETF approval, we are giving a discount on our Pro subscription. So you want to get in right now, because now is when there is so much opportunity coming. I think there's a lot of people who think the ETF is approved. Okay, is this the top of the cycle? What does this mean? Did I miss the boat, right? You get these feelings of confusion because there's so much going on in the space. There's so much news, and it's so hard to keep on top of it all. But if you're an investor in this space, which I'm sure you are if you're listening to this podcast, or if you're a builder in this space, you need to subscribe to Web3 Academy Pro this week only until Jan 16th. You can get 33% off. So hit the link in the show notes, because you're going to want to be a Pro member for the next year to make sure you're confident in the space.
You can just buy Bitcoin and do well, but really what this signaled is crypto's legit. And so the smart contract platforms like Solana, Ethereum, Cosmos, these are going to be the real winners here, and the applications built on top of it. And that stuff is not easy to understand, and that's what we break down in Pro. So this is why you want to be a Pro member if you're not already. You also get in our private Discord channel, which we have been calling everything from Solana to when the market was starting to don't sell your Bitcoin and hold on to your ETH, which we'll talk about why that was a great move after this approval. So anyway, get your discount. Let's go. It's a big year. All right, let's get into the news, Jay. What do you say?
Let's do it, man. Let's do it.
For those of you who have not been following on Twitter and haven't really just been tracking everything, we'll try to wrap everything up for you for this entire week because there was just so much that happened. First, we got the approval around mid-afternoon on Wednesday, January 10th, that the SEC has officially approved all spot Bitcoin ETFs. There was 11 of them, including, of course, BlackRock, Grayscale, ARK, so on and so on. So that's the big news that came out around the afternoon. It's funny, it wasn't supposed to be until after trading hours. And then what happened was the approvals got put on the SEC website. So everyone started tweeting about it and sharing it. And then it got taken off the website. Everyone's like, well, wait a minute, is this fake? Was this true? Like, what happened? Then the site crashed because too many people were going to the SEC website. It was a bit of a mess, just like what happened the day before, which we will get to. But anyway, we woke up this morning, Thursday, just less than 24 hours after the approvals, and all 11 are actually live to be traded. So you can actually buy these ETFs already. They're live and trading. Within the first, I think it was like half hour or something, we had over $1 billion in trading across all of the ETFs. So pretty big numbers. There's a bunch of different numbers going out on Twitter right now. Some, I'm not sure how true they are. There was a tweet that said 2.3 billion. That was in like the first hour. Eric, who's the ETF bro, has said that this isn't true. I think it's more around like 1 to 1.8 if you include Grayscale. So anyway, whatever it is, it's a large sum. These are potentially going to break records this year. Let's see. The interesting thing about this ETF approval is it's the first ETF in history in which the underlying asset that the ETF holds has a limited supply. So what's interesting is, like, let's say gold, for example, when the price of gold goes up, you can fund more of the mining, right? You have more money, it's more profitable, so you actually deploy more miners and you actually can find more gold. So the supply of gold goes up faster as the price goes up, right? And this is true of all commodities and everything that's in an ETF. Whereas Bitcoin, nothing changes. Doesn't matter how high the price goes, you cannot create more of this stuff. And so it's the first time we've had the ability for so much demand. It doesn't mean the demand's coming just because we have an ETF, but the pipes have widened significantly, and yet the supply can never widen. And I think this is just a really, really cool concept that I think is going to play out over the next year or two, and why I think Bitcoin is going to reach some pretty big numbers. So really, really exciting to kind of wrap your head around that. Let's continue on. There's a few more tweets here around the Bitcoin ETF. So a few things just to catch you up. This one was quite interesting. So after it was approved, Gary Gensler released a statement. Gary Gensler is the chairman of the SEC. He released a statement that was a little bit odd. So he just basically said, yeah, we've approved it, blah, blah, blah. But then he went into like details that normally, like, they just would not do this. So he went in and he said, though we're merit neutral, I'd note that the underlying assets in the metals ETPs or ETFs have consumer and industrial uses. While in contrast, Bitcoin is primarily a speculative, volatile asset that's also used for illicit activity, including ransomware, money laundering, sanction evasion, and terrorist financing. While we approved and listing and trading of certain spot Bitcoin ETF shares today, we did not approve or endorse Bitcoin. Investors should remain cautious. This is just so weird. Like, this is unprecedented. Never have they done this. Been like, hey, we're going to list this ETF of gold, but by the way, gold can be used for illicit activity. And gold doesn't have a use case like, I don't know, copper does or whatever. Like, weird for them to state that. But just, yeah, very interesting. They're still trying to take this like weird stance against crypto. But anyway, it doesn't really matter. They've approved it. There's going to be enough marketing out there from the Bitcoin world that what they say doesn't really matter. The other interesting that came out about Gary Gensler, he's so off and on. Like, writes this statement of, doesn't approve of Bitcoin, blah, blah, blah. But then we found out that the SEC actually had to take a vote for this ETF to actually be approved. There's 5 people that voted on this. 2, which were the Democrats, did not approve. 2, which were the Republicans, did approve. And so we were at a 2 versus 2. And the final vote, the swing vote of the approval, was none other than Gary Gensler, who approved it. So we won 3-2. Isn't that unbelievable? So very interesting. That happened. There's sort of speculation that Larry Fink and the boys over in the TradFi world have basically forced him, said, if you don't approve, we're going to sue you and blah, blah, blah. Also in their statement, they talked about they kind of had to approve this because of the court case from Grayscale. So we actually owe a lot of the kudos to Grayscale for taking them to court and winning that, because they were sort of the reason that this really became a thing this year. It was sort of like, it's probably not going to happen. Then Grayscale won, was it this summer? And all of a sudden it's like, okay, we're back. Like, let's go. And then 6 months later, boom, we're live. So we got a lot of kudos to send over to Grayscale.
Let me ask a couple clarifying questions here, questions that I've seen lots of people in our Discord and on Twitter asking. First, with these ETFs that are now live, why are their prices different than the Bitcoin price? Can you explain the market dynamics there, Kai?
Yeah, sure. So let me give
an example. The Grayscale ETF opened at $42, just to use that.
So one share of the ETF does not equal 1 Bitcoin, right? If it did, it would be whatever we're at right now. I don't know, 46,000 or something, the last I checked before we clicked record. And the problem is you can't buy, like, if one share was $46,000, most people would be priced out of being able to buy a Bitcoin, right? Because you can't buy pieces of a share in the TradFi world. And so what they've done is, it is still an exact correlation to Bitcoin. So there is, if there's $1 billion worth of value in each ETF, they have $1 billion in underlying asset of Bitcoin, and they're buying the Bitcoin at spot. But what they've done, and each one will do this differently, is maybe one has 1 billion shares that represent 1 billion Bitcoin. Maybe one has 10 billion shares that represents $1 billion of Bitcoin, or maybe one has 5 million shares. That, you know what I mean? Like, it can be very different. And so that's why the share price can be much lower, which they want anyway, so that more people can actually buy it. And so with Grayscale being, $46, that basically means that it's somewhere around, I guess it'd be 100 shares or 1,000 shares. No, 100 shares would equal 1 Bitcoin kind of thing. So, but everyone's going to be different. So they'll all be different prices, but they will all go up in correlation together. Now, the weird thing, if you've never invested in an ETF-like asset, is remember the markets do close at whatever it is, 4 p.m. And so Bitcoin will still go up or down after the markets. So what will happen is you have to wait till the next morning and all of a sudden it'll correct and like change by whatever's happened in the after hours. So a bit weird when you buy this thing, but overall it'll track it almost perfectly. And most of these have almost no fees, at least for the first few months or first certain amount of volume. But then they're really low. It's like 0.2, 0.3, 0.24. The highest one is Grayscale. So I would not be buying Grayscale. They're like 1.5%, which is way higher than all the others. But it's because they have like, $2 or $3 billion worth of Bitcoin already in it. So they're just printing money off of that. And so, yeah, I wouldn't be buying that one. I'd buy any of the others.
What do you expect to come? Are you going to start buying the ETF? Do you think that our listeners will buy the ETF? Who's buying this ETF and what can we, we've already seen over $1 billion purchasing it. Any ideas of what we can expect that might happen in the next month, year?
Yeah, so I already own the Bitcoin and ETFs, but we've had it in Canada for years. So this was a thing that I've had for a while. The reason that I have, like, most of my crypto is actual crypto self-custody, but the reason I own some in ETF is because I can put it in tax-free savings account and I can sell it and I pay no taxes on it, which is like amazing when you have an asset that goes up 10x in a number of years, right? And you can put a significant amount of money into it. So I own that. I sold on my Bitcoin spot ETF actually earlier last week and put it all into the ETH spot ETF. My reasoning was I thought that ETH would pump after this. Thankfully, that worked out well. We'll talk about that in just a second. But who's going to buy this? I think many people will. I mean, a lot of crypto natives will for the same reason I just did, which is to save on taxes. So the amount of crypto that they hold, a certain percent that they want to sell, why wouldn't you use this? It's lower in fees than even if you were to go buy real crypto on Coinbase. So it makes sense. But really what's going to happen here is every single one of these financial institutions, BlackRock, et cetera, they have a team of advisors that will go and teach all the financial advisors around the US about their product, about this ETF, who will then go and preach this to your grandma, your grandpa, your parents, whoever is putting their money in their retirement savings accounts and say, hey, you should put an allocation into this, just like they do gold and other assets. Same sort of idea. Pension funds, they have been looking to get into this stuff. So pension funds always have a different allocation to a bunch of different assets. They can now put 1, 2, whatever percent into Bitcoin. So they will be buying many, many, many different funds and institutions that have been wanting to invest this, but haven't been able to because they're not allowed to custody the assets themselves. They just, because of regulations, they can't do that. So now they can do it with the ETF because they don't custody it. Another, like obviously the company does. And so I think there's many, many, many different institutions and people that can now finally buy this and hold it. Now it won't happen all today. It'll happen over time. But I'll show you a chart in a second of what happened with gold when it had its ETF. But I think, yeah, there's many different people that will be able to do this. And I think a lot of demand will come over the next months to years.
Amazing. Thanks for that explanation. Okay, now this couldn't have all happened without a little bit of drama beforehand. So we got to tell a quick story of what happened on Tuesday, the day before the approval. Okay, so Tuesday, we're all excited. We think maybe it's coming today. And boom, the SEC tweets, today, the SEC grants approval for the Bitcoin ETF for listing on all registered national security exchanges. The approved ETFs will be subject to ongoing surveillance and compliance measures to ensure continued investor protection. Sounds just like an SEC tweet. There's even a photo of Gary Gensler with a quote from him about the approval, and everyone goes crazy. It's happening. It's live. Not so fast, okay? That was actually fake. The SEC's Twitter account got hacked within minutes. I think it was like within 20 minutes. Gary Gensler tweets out that the SEC's Twitter account was compromised and an unauthorized tweet was posted. The SEC has not approved the listing and trading of spot Bitcoin exchange traded ETF product. Okay, so it was fake. As a result of this, there was massive green candle and then massive red candle. We saw a big spike, big pump, and then a big dump. And here's the best part. Can't make this stuff up. Somebody said, hey, X, can you do an investigation here? There was a lot of speculation that this was a tweet that was scheduled and scheduled wrong, and that somebody at the SEC accidentally just pushed the button early. So X went and they did an investigation and they confirmed that the SEC's account was in fact hacked. And even worse, they didn't have two-factor authentication on. Unbelievable. We 100% should hold the SEC accountable for this. It's crazy that they didn't have two-factor authentication on. And this is on top of the fact that the SEC constantly is trying to protect us. Here's a tweet from Gary Gensler, October 24th, where he says, "This is a reminder to secure your financial accounts as well as protect against identity theft and fraud." He says, "Remember to set up multi-factor authentication." Gary Gensler, the head of the SEC, said that on his Twitter to the whole world, and his own organization has not done that for their own Twitter account. It's truly unbelievable.
There was something like $100 million of longs and shorts that were liquidated because of that hack and that tweet. I mean, it's crazy that someone in crypto actually hacked the SEC's Twitter account, number one, but also crazy they didn't, take the right precautions. But yeah, $100 million in liquidations. I think it was even more than that, but pretty extensive.
And the results of that is the SEC now will likely have to investigate themselves, which is totally unprecedented, never happened. But basically, their negligence led to $100 million being liquidated, which that's on them, right? Like they made that mistake, so they need to take accountability for that. It's just crazy. There's so many hilarious memes that came out as a result of this. I think the best tweet I saw was from John Woo, who said, "The Cointelegraph intern walked." So that was, if you guys remember, back in December, Cointelegraph intern made a post saying that it was the BTC ETF was approved. That was incorrect. They were wrong. So the Cointelegraph intern walked so the Matrix port analyst could run so the SEC social media chief could fly. And just a absolute runaround. But hey, none of this matters now because we got the approval and we can move forward. So now the question is, what do we obsess over next? What's the next deadline? What's the next thing that we can all talk about? Well, that is the ETH ETF approval. And when is that coming?
Yeah, I mean, the SEC gets no break, that's for sure. They now have to turn to the ETH ETF, which is coming in May. At least that's the next deadline. So we'll see what happens there. But let's jump over to a little bit of market watch stuff. And I also just want to touch on one thing I saw here with just sort of a way to think about what this Bitcoin ETF means to the space. So crypto in general is its own little world, right? And one way to think about it is like crypto is an emerging market, right? It's a new financial system. It's a digital country. We call it digital community. We have our own finance and our own finance services. And it's kind of like our own world that lives on the internet. And so we're almost like an emerging country. Think of like India as an emerging country, China as an emerging country. And so there's sort of two ways to think about it. The first one, when we think about it as an emerging market, is this ETF is a trade deal between the fiat world, so the US, the biggest market in the world, and emerging market of the crypto world, the crypto country, right? Very similar to the trade agreement between like China and the US back in the 90s. And this was the World Trade Agreement or World Trade Order, or whatever it was, where basically China was a private country for many, many years. And in the 90s, they opened up and said, hey, we want to trade with the rest of the world. And so you had this country with 1 billion people in it, and they could make all these products, but they couldn't sell it to the rest of the world. And all of a sudden, one day, boom, they could sell it to anyone in the world. Americans could buy it, Canadians could buy it, whatever. And this created just a massive, massive growth stimulus in China's economy. We could invest tons of money into real estate, into their companies. We could buy things, products that they made. And China just boomed and became one of the biggest countries in the world over about 2 decades, right? And so it's kind of the same idea here. It's like this is an agreement between the traditional world and the crypto world that, hey, we can now all invest in this. And so that's one way to think of it. The other one, which is quite interesting, is this is Raoul Paul, who has explained this, who's a big macro thinker. And he just said a way to frame this is that we were all seed investors pre-2011 in Bitcoin, Series A investors in 2012, Series B investors in 2015, Series C in 2019, and Series D in 2023. And now we are IPOing. And he goes, then, just like in the mid-1990s, we get to see the demand from retail and institutions. Back then, the first few days around the actual IPO of things were always weird. things went crazy and volatile while people took profits on their allocations. And then it ripped higher as new demand came in. People who didn't buy pre-IPO all of a sudden could now buy, whatever stock we're talking about here. Same sort of idea with Bitcoin. Now, it's not that, but it's just a nice framework or way to think about it that I thought was pretty interesting. Another way to sort of think about this is if we look at, and again, I have a chart up on the screen here, this is looking at what happened with gold after its ETF was introduced versus Bitcoin when its ETF is introduced. So gold, you could buy it, but it was difficult to buy pre-ETF, but many people did for many reasons, similar reasons to Bitcoin actually, and it had its ups and downs. It was very volatile, etc. And then the ETF approved, and this thing just went absolutely nuts. It was like a 500% growth. I see 300% growth, it looks like, from its previous all-time high in just a matter of years kind of thing. Now, gold, this was back in the day. This is like the 80s or the 90s, whatever. So it took a lot longer for people to get money and be able to buy this. Whereas like now we live in a world where money moves so freely. And so my assumption is the amount of money that can flow into this will be much faster and much more than what happened with gold. So yeah, it's an interesting comparison of what we saw with gold to now what we will see with Bitcoin. Interestingly, though, I was not buying Bitcoin when this was approved. I was actually selling my Bitcoin, and instead I was buying some ETH, which is quite funny. And the reason is for what? Yeah,
you're crazy.
I mean, anyone who's pro knows this. We've been talking about this for a while. I thought the trade would be, once this approves, we're going to move, everyone in crypto is going to move to ETH, and we're going to speculate on the ETH ETF now. And so the ETH BTC ratio was dying for a while there. So I want to just touch on that and what happened and what I believe is going to happen. First, quick overview of markets. They have been up and down like crazy in the last 24 hours. Bitcoin just earlier today, an hour and almost 2 hours ago now, it was at 49,000. So it was pumping and people were like, what? No, sell the news, no, sell the news. And then in a matter of minutes, it dumped all the way down to 45.5. So just it's up and then it's down. It's all over. I mean, we're basically where we were when we started the day, but wildness. Ethereum has done the best here, especially over the last 2 days, but it is sitting right around 26,000, but it is up a lot since yesterday. It was at 2250. Actually, at one point, it was below 2200 on the 8th, and now we're already up. We reached 27, and now we're sitting around 26. So it's a wild 40 hours. By the time that this thing goes live, like who knows where we'll be. Things are a little bit crazy. But what really matters here, what's been interesting to watch is I have been flagging this massive wedge pattern for Bitcoin, for the ETH BTC ratio for a while now. It's this like 7-year pattern where if it breaks to the up or down, it's going to be a massive move. And we have been at the bottom of this wedge pattern for weeks, just fighting it. And for months even, actually. And on the weekly, we actually closed last week below this wedge pattern. And so it was looking pretty bad for the ETH BTC ratio. It not only broke below this wedge pattern, but there's been a range that we've been in between ETH and BTC for 3 years now. And it actually came and touched the bottom of that. This was just like 2 days ago. And I was like, oh, damn, this is getting way worse than I thought. If we go below that range, like we are going to dump, meaning the ETH BTC ratio. And then out of nowhere, the fake approvals, actually what really did this, the fake approval, we saw immediately that ETH was pumping and the ETH BTC ratio went up. And everyone was like, whoa, what just happened? Because then all of a sudden we realized it was fake. And everyone's like, wait, so ETH is going to pump when this thing approves? And then it got approved yesterday and ETH did pump. And so now we are back in that wedge pattern, which we were so far out of it and so below. I was like, dang, this thing's done. But we needed a monthly close below it. And now, I mean, we still don't know. We got to wait for the end of this month. But we've already pumped all the way back up. I think we're sitting at 0.056. We were down at 0.048. And so we're back in the wedge pattern. We're back in the safe zone. And we'll see what happens moving forward. My expectation is that ETH continues to fly moving forward because I think all combos now move to ETH ETF after this. And especially if Bitcoin does well in terms of inflows, people are going to be like, okay, ETH is going to have these kind of inflows as well. And ETH is about the quarter of the size of Bitcoin, maybe a third of the size of Bitcoin. So a lot less money can make it move a lot more. So anyway, that's what we're watching. The other interesting thing that I wasn't really so confident, I was really confident in the ETH BTC play, Sol ETH, which has been a wild one to watch. Sol has just absolutely ripped against ETH for the last few months. It has actually come back the last few weeks as well, meaning ETH is starting to catch up. So 3 weeks in a row of ETH outperforming Solana. And there was a moment there where both, when the approval happened, Bitcoin was down, Sol was down, and ETH was up like 5, 6, 7%. I was like, whoa, what is happening? And so even today, Sol is down 2.3%. Ethereum is up 0.4% on the day. So this is, I think, ETH's moment where it's just finally, taking its reins back and saying, hey, I'm not dead. I'm coming back. And the L2 tokens, which I also talked about, have just also been on a tear, like 30% they were up yesterday. So ETH ecosystem is going to have its moment. I think that continues for the next few months here. Interesting. One other thing on the market watch side of things, we had inflation that came out this morning. So if the ETF and all the noise around that wasn't enough, we also have some macro stuff. And inflation came out sort of mixed. So the CPI, if we look at CPI, was actually up, and it was up higher than expectations. So it's up at 3.4%. This is the inflation in the US. It was 3.1 last month. Now it's at 3.4. The expectations were 3.2. So that is not great. However, what we care about more than anything is core inflation. That was actually down. So we were at 4% last month. We were down to 3.9. It's slow and steady, but as long as core continues to go down, then I think we're all good. We're laughing, but we would have loved to see it go much lower, but didn't happen. It is what it is. Not a huge deal. I still feel good about where everything's going with inflation and where things will likely go with interest rates in the coming months. So not only do we have an ETF approved, we have core inflation continuing to go down and likely rates to start to go down this year, 2024. What a time.
What a time. Do you think, obviously, markets are so controlled by narratives, and you're talking a lot about how ETH will become the next narrative, mainly as a result of the ETH ETF. May 23rd is the next deadline. As we get closer to that, there will be more and more conversation about that. As you said, particularly if everything goes well with BTC ETF, which it's, we're hours in and we're already over $1 billion, so it's clearly going to go well. Do you think the narrative is going to switch to ETH and away from Solana and Bitcoin? Or do you more just think that there will be an ETH narrative that joins the party?
That's a great question. I think both Bitcoin, Solana, ETH all do well in the next quarter. I don't think like ETH just runs and nothing else moves. I think they all do well. I think ETH just probably outperforms for a little bit here, though I still don't feel confident about that with Solana, because I feel like anytime ETH moves generally in a week, 2-week basis, whatever, Solana's probably going to come back. But no, I don't think everything else goes away, but I do think ETH steals the spotlight. So just like we've had Solana steal the spotlight for the last couple of months because of all the airdrops and the Solana Sagaphone and Bonk and all the things going on, I think we have the EIP 4844 upgrade coming next month. So that's going to drive a lot of conversations. People are going to be talking about a lot on Twitter. And what that means is L2s, the fees on them are going to go down by an order of magnitude, so at least 10x. So we're talking sub 1 penny to use L2s. That's going to be a big deal, I think, because you have something like Base, right? Like Base is going to have an order of magnitude cheaper fees come February. And that's a publicly traded company that's going to be talking about that. Plus you have OKX and others launching. There's so many L2s. I think we're going to see some hype around L2s in the coming weeks because of that. And then, of course, we also have the ETH ETF. And just like when you have this speculation on ETF and you have the SEC talking about it, the media starting to talk about it, people start to learn about it. We're going to have commercials coming out about ETH and how it's the internet bond and how it has yield and it's deflationary. And like all these things we've all been talking about for the last 2 years are finally going to be put in like nice marketing formats, commercials. There'll be nice infographics, like all the things that we try to put out, but we're just this small little, store or whatever you want to call it, like an analytics firm. And now you're going to have BlackRock putting this stuff out, putting out commercials, and ARK and like Fidelity and the biggest companies, financial companies in the world, all writing reports and putting out good marketing material about what ETH is. And it's going to help people wrap their heads around it. I think Solana probably rides along with it though. So I think like I plan to probably sell a bit of ETH into Solana at some point. My hope is over the next little bit, ETH really runs. And if it does, and that SOL ETH ratio really picks up, then I probably will move just a little bit. I have like a amount that I'm trading for this cycle just for fun to fulfill my inner degen so I don't go and screw everything else up. And so probably I'll put it back in SOL, and then Solana will have its narrative once again at some point, maybe when FireDancer goes live. Like this is what the cycle is all about, just narratives and narratives.
Yeah. And you make a good point that with the Bitcoin ETF approval is going to come so much media around Bitcoin. The thing that we all need to remember is the masses don't know the difference between Bitcoin and cryptocurrency. To them, it's all the same thing right now, and they're learning. But as a result of that, all ships rise with the tide for sure. There's a lot of positive information and knowledge coming towards crypto in general, which God knows we need it. We've had a rough few years of a lot of negative media attention. So I think this positive helps everybody out.
Well, and speaking of a big narrative, Jay, let's start the first part of our news. If you want to share your screen here, here's something that's going to generate some buzz around Ethereum, because this company lives on Ethereum, which is Circle, which is the creator of USDC, has just filed today. It's funny, they must have been waiting for the approval of the Bitcoin ETF to now do this. This is why I say the SEC is not done yet. They're busy, not just ETH ETF, but Circle is filed for an IPO. And so the SEC has to go and do all their work and due diligence to fulfill this as well. But Circle is a company that lives on top of Ethereum, essentially, right? USDC, its main liquidity, is on Ethereum and moving to its L2s. It's also on Solana and some others, but its biggest chain that it uses is Ethereum. I guess TON as well, but that's mainly USDT, or Tron, not TON. So anyway, you have a company that is about to go public that exists only as a result of Ethereum, right? And that's really cool. Someone else put out a tweet, was like, what happens when the real world assets start to move on chain? And so Circle, which is a company that hosts its asset on Ethereum, then IPOs and puts those shares on top of Ethereum, right? And it's like, okay, this is just getting a little bit meta here. But so yeah, this is just, I think, again, proves the utility and just the validation of what Ethereum and smart contracts in general are doing. And so we're going to have a company that IPOs, and hopefully Circle does really well, because what I've seen is there's about 6 or 7 other crypto companies that will also IPO if this gets approved and does well.
Yeah.
Companies like Kraken and whatever else. So it's going to be an interesting year.
Yeah, it's the start of big things to come for sure. And as a result of the Circle IPO, we're also going to see a lot more talk about stable coins, which is really the app that is going to change the world and the way that we transfer money. And there isn't enough yet people that understand stable coins that are outside of crypto. So it's all going to head in that direction as well. I mean, bullish. Let's go. Okay, next up, Fox Corporation is launching a new platform on Polygon to verify their content within licensing deals with AI firms that are using their content. So this is something that we've talked a lot about, is we have a massive problem of content verification. Who is the owner? Who actually created this content? And then was somebody else allowed to use that content? Well, if you're Fox Corporation, you're one of the biggest content producers in the world, and a lot of your money, a lot of your revenue comes from content licensing deals where you enable another media company to use your content, to reuse it, to repurpose it, okay? The problem is it's very difficult to track that, and with the creation of AI and the mass adoption of AI, it becomes even more difficult to do. So Fox has launched Verify, and this program, which is just launched in beta, it launched on January 8th, is basically, it's going to allow any media company can register content from articles to audio messages to images, and then grant usage rights to AI platforms. And then using the Verify tool, these pieces of content are cryptographically signed on Polygon, allowing customers to identify the content from trusted sources. This is huge, super exciting. I'm super worried about the identity and content verification problem that is going to come. And we're already seeing it, but it's going to get so much worse. So this is amazing.
Yeah, I think it's super cool. It's great that they're building a platform for others to use it too, which I think is really exciting. I mean, this is just such a problem that we already have. Like I think I was on Twitter this morning, Sam Altman, I guess, just got married. And I think yesterday or this weekend or something like that. Sam. And there was a picture of it. And everyone was just like, is this true? Like, do we know if this is true? Is this just someone AI made this? And like, no one knew. And we were like, because it was a screenshot of his Instagram. And because he didn't publicly say it on Twitter. So everyone was like tagging him, like, is this actually it? And I'm like, man, you have to do this with everything now. And so like things like this, and we need media, especially, to be the ones that can verify. So I think this is an awesome platform. Well, I don't know if the platform's good. I've obviously never used it, but the idea is legit, and we need this stuff. So really exciting. Jay and I have talked about this for, I don't know, a good year at least, since ChatGPT came out, saying that we need something like this. So didn't think Fox would be the one to do it, but cool. I have some interesting news that isn't so great, but honestly somewhat expected. And that is that X removes NFT profile pictures from its platform. So interesting, because this is actually the initial tech that I thought would make sense for how Verify would work, right? So you can verify content on chain through Web2 platforms, right? So there was this ability to connect your wallet to Twitter, and then you could look at the profile picture and see like, oh, that's actually an NFT and this person owns it and this is the group that made it and blah, blah, blah. So you could verify. And this was the initial aha moment for me of saying, oh, all content is going to do exactly this. I can click on an image just like the hexagon profile pictures and verify who uploaded that on chain, right? Was it actually whichever person or company? And so it was kind of the like first look at how this would all work. But I guess for profile pictures, people don't really care. And here's why I think they probably just shut this down. One, very small population was actually using it. No one really cares about NFT PFPs, although I think that will increase in the coming year or two. But still, it's quite niche. Like under 10,000 people actually would use it or care about it. There's not even like, I forget how small the market was actually trading this stuff. And most of those people don't actually care about the art. They're just trading it to make money. It's not a revenue generator for Twitter. So why would they continue this? It probably adds a lot of expenses because they actually have to keep up with all the different blockchains and the L2s and the different wallets. And it's like, for me, if you're a big tech company and you're not going all in on crypto or on blockchain, there's no point in dipping your toes in right now because it's still too confusing of a space, right? There's too much new shit. It's just not mature enough to like do small little things. It's like you either need a blockchain team and you need to go all in on something, kind of like what Reddit did with their NFT not marketplace, but their NFT avatars. Or you just got to kind of get out. And so it kind of makes sense that I think X would do this.
Yeah, I think it's a really good point that we need to remember that just because these massive enterprises are launching blockchain programs and then shutting them down does not mean that they don't value blockchain long-term. They are all experimenting. And so we're going to see, as with the start of any new technology, we're going to see a lot of trial and error. And I think the funny thing is X wants to solve the identity problem that we have online. And they, as you said, this was a way to try to do it. Didn't work because there's just not enough people that want to do it this way yet, but they've tried it. So now in the future, they've got an experiment that they can look back on the next time they try to solve the problem. Okay, next up, Visa. Visa launches a Web3 loyalty program. This is a program not for Visa customers, but it's for brands that use Visa. So this is more of a platform that would allow any brand to gamify rewards and bring immersive experiences to digital-first customers. This is huge. You could imagine that basically what this does is it allows any brand that has a partnership with Visa and uses Visa to launch a loyalty program where you can gamify giveaways by giving away digital collectibles. You can have augmented reality treasure hunts, and then you can use new ways to earn and burn loyalty points. One of the biggest problems with loyalty right now is we all get these points, but they're sort of meaningless. They're just a point that is connected to that company. If we don't want to use them with that company, a lot of us just don't even use our loyalty points. Well, imagine that your points, rather than your points being just connected to that company, imagine you could openly trade them. Imagine you could burn them to gain something else. Imagine there was ways to earn more loyalty points by completing a game. Or imagine that your loyalty points came in the form of a digital collectible with programs like Uptrip, which is Lufthansa's loyalty program, or programs like Starbucks, where rather than just getting regular points, you get a actual piece of art that is memorable and connects with what you've done with that brand.
We're so back. We've got Visa, Fox, Circle IPOing, BTC, ETF approved. Like, what is this news we have this week? This is insane. You know what's funny about this? And I got to give some kudos to Visa is they keep building and shipping in this space. Whereas think about, you were just talking about big tech will build things and some will work, some will not. How many times has big tech built in crypto and then they built at the top of the cycle and then the bear market came and then by the end of the bear market, they leave. And then all of a sudden we go through another cycle again. And it's like Instagram bowed out of what they were doing with NFTs. Twitter bowed out, Reddit even, which was kind of surprising just a few months ago, backed out of the community points. And all this is happening at the bottom of the bear market. These are bottom signals. And so what's your top signal this cycle? Well, when Twitter, when Instagram, and when Reddit come back in and start building and saying they're going to launch new things, that's probably your top signal for the next cycle. But Visa's not, because Visa just keeps shipping. They've been doing it consistently for years and years through multiple cycles. That's really impressive. And they're not just focused on the payment side of things. They're doing so much more, like you just said, with Web3 loyalty. They're doing some music stuff. They're doing a ton of stuff on chain, which is really cool.
Yeah, so much happening there. Okay, next, let's move along to OpenSea, which is partnered with our friends Privy to launch their own self-custodial wallet. This is huge news. Well, I think this is big news. Kai, I feel like you don't think this is big news as I do. So we'll get your take on this. But let me just explain what happened here. So this happened on Monday. So basically, OpenSea introduced a new onboarding experience where you can simply create your own self-custodial wallet just with an email address on OpenSea. As a result, you could use this wallet. You could buy, sell, and send crypto within this wallet. You could buy, sell, and send NFTs. You can manage your crypto. You can view your crypto transactions. This operates just like a typical crypto wallet. And then what this allows OpenSea to do is it allows them to completely change their onboarding experience, where now you can go to OpenSea, you can sign in with an email the first time you're at OpenSea, you can purchase an NFT with a credit card, and then automatically a wallet is created for you, and that NFT lands in your self-custodial wallet. And this fits with OpenSea's plan OpenSea seems to always be aiming in the direction of trying to be the Shopify of Web3. They want to be the Shopify of digital collectibles. And so there's a great quote from Devin Finzer, who's the CEO of OpenSea, where he says, one of our internal mantras at OpenSea is, how do we make your first NFT purchase as simple as purchasing a pair of sneakers from a Shopify store? Clearly, this is a huge step towards doing that.
I originally wasn't so close because I don't know, do like new people really come in and need to use OpenSea to buy NFTs? Like, isn't that whole thing done? And then I was reminded of the amount of celebrities and companies, et cetera, that launch NFTs in the bull market. And that's likely going to come back. And that brings in a lot of new people. And it was very challenging for many of them last cycle to like go get a MetaMask wallet and then go fund that wallet and get ETH into it, which meant they had to go get like a Coinbase account and like take days to fund your wallet and figure out how to do all this just to connect in and then spend $60 minting an NFT. And the NFT was also really expensive. So I was like, I don't know about that. But now, I mean, a lot of NFTs will probably launch in L2s or Solana, so they're super cheap. And now that you can just do it with an email, it makes sense. And I think all those things will come back of people launching NFTs. Whether they'll be like PFPs and stuff, I'm not sure. But I would bet all that comes back. And so having OpenSea have it just be so easy is obviously huge. I think every application in crypto is going to go this way. This is what Frontech has done. This is what Sound is doing. And I think they're all going that way. And kudos to Privy for setting all this up. The one weird thing that comes to this is like we're all going to have like many embeddable wallets. Like if you use Sound, if you use Frontech, and now use OpenSea, you now have 3 embeddable wallets. Plus, let's say Reddit is an embeddable wallet. So it's like, okay, there's 4. Now what? Right? But Privy is also building, we talked about before, the global wallets, which is the way to like interconnect all those. I don't know how that's all going to work yet, but I'm excited to see their solution to it because we definitely need it. But I think every app is going to have these embeddable wallets now. So really cool.
Very, very exciting. Okay, next up, what is going on in India? One of our team members lives in India, and he brought this story to our attention, which is an important one to look at because Binance, KuCoin, and other exchanges, OKX, have been removed from the Apple App Store in India. I don't think they've been removed from the Google Play Store yet, but I assume they will be removed from there as well. Kai, what's going on here?
Yeah, so basically all the biggest exchanges that people from India are able to use, like Binance, KuCoin, all the ones outside of India. There are a few Indian ones, but they're a bit smaller. But all those are basically getting kicked out of the Apple Store in India, so you won't actually be able to download them and use them. India has a hard stance on crypto right now. They don't want people using this for whatever reason, which is, it kind of sucks because India is the largest population in the whole world. It's like 3, 4, maybe it's more than that billion people. It's a lot of people, and we want them to be buying our coins. We want them to be buying our bags. And not only that, they also need this, right? Like they don't have a lot of banking services, et cetera, there. So it's like, this is a product, crypto is a product that really helps them. I don't know about the inflation there. I don't know if it's as bad as many other countries, but regardless, it is a service that many of them can use that the government, for whatever reason, is trying to block them from. Hate to see that. We were asking Akshay, who works with us, what can they do there? And he said there are Indian exchanges. However, they also get blocked all the time as well. And so it's tough to get money into crypto. So and then they also tax like crazy. I think it's 30% on any of your profits, and anything that you lose, you don't get to like count that towards that to like minus some of your profits. So it's a weird setup they have. I would bet they flip at some point. The reason why I bring this up is expect countries to have pretty aggressive takes on crypto this cycle. China has notoriously, the last 2 cycles, banned crypto right near the top of crypto each time, which is actually ends up being a good thing for the citizens because then they don't buy the top, which is kind of funny. But then they end up coming back. India has been a little bit up and down, but mainly down on crypto. We'll see if that changes at some point. I don't know. But obviously India, big population, and we hate to see any country blocking their citizens from getting crypto. You can't ban crypto. You ban your citizens from having easy access to it, but they can always find ways to get around to it, right? So it just sucks for Indian citizens to now they have to pay like expensive ways to get crypto, and I don't know. It's just annoying, but something we'll keep an eye on.
All right, time for our favorite segment, agree, disagree, or explain. Before we jump into this segment though, we have a poll question that we ask you guys every week. And this week's poll question is, did you or are you going to buy the BTC ETF in the US? I'm curious to know how many of our listeners have already jumped on buying it or will plan to buy it in the future, or whether you're not going to buy it and you're just going to continue to buy Bitcoin the traditional way through. Funny to call it the traditional way. It shows how long we've been in crypto for. The crypto way to do it's the self-custody way. So check out that poll if you're listening on Spotify, because we'd love to know.
If you're on YouTube, just comment in the comments below and let us know if you're buying and why you're buying it. Are you trading it? Are you using it for tax-free savings? What's your story?
Yeah, we'd love to hear. Okay, first, agree, disagree, explain. This is from Anatoly, the founder of Solana. It says, my bold prediction, there are no longer any order of magnitude improvements to blockchain technology left.
I would say I don't know enough about the tech side of things of blockchain to say if I agree or disagree. I did see this tweet and I actually commented because I was like, well, isn't the Fire Dancer validator client that's coming next summer an order of magnitude better for Solana? Which it would be, because it would make it more than 10x as scalable as what it currently is. So that is an order of magnitude right there. But basically what Anatoly said was there will still be order of magnitudes improvements in hardware, just not in the blockchain technology itself, which is bullish for Solana because Solana's tech, in terms of its blockchain, is fully reliant on hardware getting better and better and better. But hardware, as we know, it improves by like 2x every 2 years or so. And so it gets faster and cheaper by double every 2 years. And so we can continue to expect that to happen. And so in just a few years, you'll have order of magnitude improvements in the hardware tech. So again, I don't know where things will go in the blockchain tech side of things. All the improvements of Ethereum, I mean, maybe proto-dank sharding or dank sharding, the full one, is probably going to be an order of magnitude better for Ethereum. But dank sharding already exists on other blockchains. So I guess technically that's not a like new innovation to blockchain because that already exists on something like Near. So yeah, I don't know. It's a weird take, but overall, I think we've seen a lot of the improvements now. And then I think it's up to hardware, at least for Solana's side of things, is what he's getting at.
All right, next up, this was a quote from Joe Lubin, the founder of Ethereum, that DGen News then requoted. And Joe Lubin said, Solana is a great technology, but not a mature ecosystem yet. When asked on CNBC about the prospect of a SOL ETF. So basically he's saying that there will not be a SOL ETF because it's not a mature enough ecosystem yet. Kai, agree, disagree?
Yeah, I think I agree. And when I say mature, what I mean by it is, first, I think someone files this year. It's one of my predictions for 2024 in our predictions report. I don't think it gets approved. And the reason is there is still a lot of centralization around the tokens that are held of SOL, meaning there's a lot of like VC funds that originally invested and then like the founders and the team of Solana. And then just like, I don't know, FTX, for example, owns like, I don't know, something close to like 20% of the entire supply, like a lot of the supply. I don't know if it's 20, so don't quote me on that, but it's a large amount. And these funds still hold it and they can't sell because they're vested. So they have like an unlock period, which is like 2025 March for FTX. So and the reason that's a problem obviously is like, that means just a couple funds or institutions could get together and they own more than 50%. So there's just a lot of attack vectors. I think there's plenty of decentralization in terms of Solana's tech and its nodes and validators, et cetera. So like, I'm not saying that it's not a decentralized platform. It is. I just think the distribution of Solana, which by the way, Ethereum was the same. So was Bitcoin in the early days. There was just a few people that held Bitcoin in the early days, few people that held ETH in the early days. They were a little bit different. Neither of those had like a funding round. So there was less like whales, I would say. And so anyway, it's not going to stay that way. Over time, these funds will sell out their tokens and more people will buy them and more users will come in. So like, it's not a concern by any means. I just don't think that the SEC will approve something like that, especially when it's like FTX is one of the biggest holders, which is a company that has one of the biggest frauds in the world. So like, they'll probably wait until, at least that March 2025 cliff when they can unlock all those. And ideally FTX probably sells all that or gives it out to customers. So anyway, that's my guess. I agree.
Yeah, I'm going to agree. I'm going to agree with that one as well. Great take. Okay, next up, this is from Mert. If we cared about decentralization as much as we say we do, then we would actually want as many blockchains as possible to succeed. A world with just one L1 is a world with a single point of failure.
Yeah, I mean, I sort of agree. I agree with this. I don't think that there will be hundreds of blockchains, and I don't think that there will be just one blockchain or that there should be just one blockchain. The one thing to keep in mind is when you have hundreds of blockchains, like so let's say the Cosmos ecosystem set up, there's just tons and tons and tons of chains, you fragment security, right? Because each blockchain has its own token that it uses to secure its blockchain, which means that you have less security for every chain. Whereas if you just had all that capital in one chain, it would have a lot more security. Now, obviously, there's other risks that exist outside of just the market cap of a token and the security around that. And then there's different types of technologies, et cetera, that you want. So like, I don't think that we should have just one by any means, but I don't think we should have hundreds either. I think there'll be, 5 to like 20 important ones. There might be a bunch of private ones and whatever, but I think obviously Ethereum and then its idea of a bunch of different L2s, that's a great way to sort of like mitigate risk. And then you're going to have something like Solana and more. This is also like a good take for like, people like, well, if Solana's so cheap, why doesn't everything just go on Solana? It's like, that's never going to happen. It doesn't matter if it's scalable enough for it, doesn't mean the whole world's going to go on top of that. It's just, that's not how the world ever works. And so Solana will probably have a lot of apps. It's just not going to be the only one. And we wouldn't want that anyway, right? And so I think that's why I say always there's plenty of room for Ethereum and for Cosmos and for Solana and whatever else comes in the future. I guess I agree.
Great take. Thanks, Kai. Okay, next up, this came from Josh Stark. He said, it happened. The Ethereum L2 TVL passed the Alt L1 TVL for the first time ever this week. Ethereum L2 TVL was over 20 billion and the Alt L1 TVL was just under 20 billion.
Yes, this did happen. However, I think there's a bit of a caveat to it. I just want to look because this tweet came out before we had this massive pump. So I bet you this TVL is way higher. Yeah, we're at 22.5 billion now. So we've gone up 2 billion, almost 2 billion since that tweet. So yes, the TVL on layer 2, so total layer 2s, which there's, 50, 60, 70 of them now, is higher than the Alt L1s, which would include like Solana and Cardano and blah, 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 blah. But this isn't actually true. And the reason is TVL on L2s, at least if you're looking at L2 Beat, it's done differently depending on the analytics platform you're looking at, but they are using L2 Beat, I believe. It's the reason why it's different comparing L2s versus L1s is L2s don't just count. So L2s count all tokens that exist on their L2. They don't even have to be in smart contract platforms. It's just everything that's on there because it's been bridged over. And so all of that is counted as locked. So even if it's not actually like in, Aave or Maker or whatever, locked in a smart contract, it's just the fact that it's all been bridged over, which other L1s won't count it that way. And then also the tokens of the L2s like ARB and OP, et cetera, those are counted in this. And so, Solana, so Sol is not counted in the TVL of Solana. If it was, Solana's TVL would be 50 billion, right? Because that's what Sol's market cap is. Whereas Ethereum L2s, they're counting ARB's TVL, which is like 3 billion, and OP, which is like 3 billion. And so you're comparing apples to oranges here. It's a ridiculous comparison. Shame on Josh Stark. Actually, shame, I'm kidding. But it doesn't make any sense to compare those two. That said, the TVL on L2s is growing and is massive. It's not to the point that they're saying.
Okay, last one. This came from the Crypto Dog. They said, working on a theory that in fact we are near this cycle's top, an early rally spurred on by the BTC ETF. We just ran it back on double time, and now we need to crash and cool off for a while before the next rally. Halving has no immediate effect. The catalyst ran its course.
I would disagree with this. Look, we might have a pullback at some point, and it could be now, who knows? It just doesn't make any sense in terms of the marketing and demand we're about to have because of Bitcoin. Whether it's the biggest ETF that ever exists or it's something small, it doesn't really matter. The fact is there's going to be tons of marketing on Bitcoin, and now it's more readily available. You're just not going to have more people coming in as a result. But then not only that, if the Bitcoin ETF launched in, let's say, the bear market when macro was still really bad, okay, like maybe it wouldn't have a big effect. The reason why I don't think we've topped or are anywhere close to top is twofold here. One, macro just looks like it's really getting much better. And so when interest rates go lower and we start printing more money like we're about to do, there's no doubt in my mind we're going to go into a mega bull market again. And I think that happens this year and next year. So I think we're just nowhere near that. We've just made the turn out of the that liquidity cycle, and we've just peaked in terms of rates. And so we're about to head lower. So there's just no way we don't go higher from here. Do we have a small correction, whatever? I don't know, those can always happen. So who cares? But he's saying it's the top of the cycle, which is just, there's no way for that reason. Then number two is, if you look at all the metrics, retail and newbies have just not come in yet. And so what always happens in these cycles is crypto natives, people that get it, and institutions come in first. We get it back up to all-time highs and beyond. And then that's when all the other people, the no-coiners, go, oh, what's this Bitcoin thing? It's back. Let me learn about it. And they come in I heard Bitcoin's going to go to the moon. So I throw, all of my life savings in this thing somewhere near the top, and then they end up getting wrecked. And then they leave in the next bear market like they always do. We're nowhere near that, not even close. If you look at the Google trends of crypto, Bitcoin, etc., the numbers are tiny. If we look at views on YouTube of the big crypto influencers, they're coming up. They're starting to escalate, but it's still very small compared to where things were at last cycle. So I think we're a long way off of the top of the cycle. So I completely disagree here.
I'm going to have to second that. I also disagree. I think we're just getting started, and things are going to be big this year. That's why right now we got a 33% discount on Web3 Academy Pro. And if you want to make sure that you're on top of this space, you're going to want to go pro, because as we always say, there is a diversified way to invest your portfolio. There's also a lot to stay on top of if you're a builder, if you're active in the space, if you want a job in the space, if you want to participate, if you're a doer, all these things, you need to go pro today. It's 33% off right now to celebrate the Bitcoin ETF approval, because we are fired up about this and we think this is the start of big things to come. So click the link in the show notes. Go pro today. Kai, what an episode. What a week. Holy geez. How you feel?
Do we have another one that has that much big news, do you think? Or this was pretty crazy. I guess maybe the ETH ETF someday. I don't know if that would be bigger, but let's see.
This feels like a milestone we'll look back on for a long time. Everybody have a drink to celebrate. I hope you celebrate with those around you. Or if no one around you is in crypto, celebrate in our Discord. Share a photo of yourself having a drink and celebrating, because we love to see it. Have a great weekend, everybody.
Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.